A lot of subscribers have asked me for a deep dive on the company Digital Turbine, ticker APPS. Now, like a lot of these deep dives, you start going down a rabbit hole. So welcome to the AdTech rabbit hole. I'm your host, Eric, Mr. Fired Up Wealth. The first thing I want to do, I guarantee you there's people that own Trade Desk and own Digital Turbine and don't really understand exactly what these businesses do. So I want to paint a picture from a high level, explain the AdTech business or the AdTech ecosystem, and show you the different types of businesses that make up that pie. And then we're going to do a deep dive specifically on Digital Turbine. They actually report earnings tomorrow after closing bell. So you're definitely going to want to pay attention to this video. I think you're going to like this one a lot. Deep dive on Digital Turbine in the AdTech space. Stay tuned. What the tech, DMP, DSP, SSP, what does this mean? This is Trade Desk, this is on their blog. Let's first break down what this digital advertising, this ad tech space is all about. So digesting ad tech's alphabet soup. So demand side platform, supply side platform, and data management platform. What's the difference and which stocks fit into these baskets? DSP, SSP, and DMP for short. Each term represents a vital part of the ad tech ecosystem, and they all sound similar. So to make matters more confusing, they work in conjunction with one another, and their functions often overlap. So what is going on here? So let's start with DSP. Actually, before we do that, it might be helpful to explain what an ad exchange is. Much like a stock exchange, it's a place for buyers and sellers to come together and execute stock transactions. An ad exchange is an online marketplace for buying and selling digital advertising spots. Simple enough, right? Sellers, in this case publishers, make their advertising inventory available on an exchange, and buyers, brands and advertising agencies, can bid and purchase it. Exchanges allow brands and agencies to bid on ad inventory in real time. When an exchange is working well, it allows advertisers to buy ad placements efficiently and for publishers to receive the most competitive price for their ads, optimizing revenue. Simple enough, right? Okay, so remember that that's an abbreviation, DSP, for demand side platform. So in this instance, demand refers to the organizations buying ads. So brands and agencies thus providing demand for the advertising inventory. A DSP then is a platform where brands and agencies can buy ads across several different advertising exchanges. That is, it aggregates advertising inventory from several exchanges in one place, allowing for greater efficiency. So SSP must be the opposite, right? Yes, indeed. An SSP is the inverse of a DSP, whereas a DSP lets advertisers buy across several different ad exchanges at the same time. An SSP lets publishers sell their ad inventory across different ad exchanges. The thinking is that by making their ad inventory widely available via an SSP, publishers can ensure they're receiving the best possible offer and that they're maximizing their revenue. A simple way to think about this is DSPs are for marketers, SSPs are for publishers. They're part of the same ad marketplace and they use similar technologies, but they work on the opposite sides of the transaction. With DSPs and SSPs, the entire process is automated through a web portal. This is what people refer to when they talk about programmatic advertising. You're going to see that word over and over again. If you haven't heard it before, now you've seen it, you're going to see it over and over again. It's a secular growth trend. It's a mega trend. It's a tailwind. Programmatic advertising. So the third one's a DMP. It's slightly different. As the name implies, it deals primarily with data. Advertisers use all kinds of data to ensure their digital ad campaigns are relevant to the consumer. A DMP allows brands and agencies to store all this data in one convenient place, a central repository, and then they can call upon that and use it when they run a campaign. So there you go. There's from a high level what goes into digital advertising. Okay, so we've literally just touched the tip of the iceberg in this rabbit hole, and I'll try to be as concise as I can. Now, this is from Forbes. New titans of ad tech versus the big dogs, right? When you think of the mega cap tech stocks. Now listen to some of these stats just really quick, just to paint a picture before we get into talking about Digital Turbine. According to November eMarketer report, Google's share of digital advertising will drop to 35.9% next year from 36% this year. It doesn't seem like a lot, pretty minimal. Facebook will dip from 28.6% in 2021 to 27.7% next year, and even lower, 26.4% in 2023. Plus, there's rising challenges from Amazon, which the same report says will grow to 14.6% in 2 years. Amazon's last quarter actually had very solid revenue numbers on their ad business. I did a video earlier in the channel that talked about that's kind of their sleeping giant. A lot of people think of AWS. Advertising is becoming a big deal at Amazon. And of course, the ad tech space has had a lot of drama recently, and there's been really a ripple effect that's impacted a lot of different stocks because of Apple and their privacy changes. You also have Google getting rid of cookies. So you look at this, Google says it'll stop supporting third-party cookies in Chrome browser by the end of 2023. We've done videos on the channel about Trade Desk and how they're going to get around that. So there's a lot of stuff going on behind the scenes when you think of the ad tech space. And these mega cap tech stocks are really running the show, but you're seeing some mergers and acquisitions in these smaller companies, and they're really trying to take a shot at some of this market share, and that's what Digital Turbine's all about. And so mergers and acquisitions, will that be enough? This picture right here, you can't even see it. There's tons of company logos on there. This is Scott Brinker's marketing technology landscape. It shows the growing number of companies in advertising and marketing. That's a lot. That's actually mind-blowing. You look at that, you're like, how could there be that many companies that focus in this space? So he talks about the new titans of mobile ad tech and how they build out functionality far beyond traditional ad networks. Now, there's really an arms race between a lot of these companies. One of those companies is ironSource, had a $9.2 billion market cap at the time of this article. And you can see some other ones too, like AppLovin bought Twitter's MoPub. But you can see that ironSource has made acquisitions, Supersonic Ads, Luna Labs, a bunch of names I can't even pronounce, don't even know what they do, Supersonic Games and more. You know, AppLovin's doing mergers and acquisitions. You talk about Lion Studios, you think of Machine Zone, etc. And then Digital Turbine. And I'm gonna go into those acquisitions and break those down for you. But they've made some acquisitions with Ad Colony, with Fiber, and Appreciate. And of course, there's risk when you're going after a big dog like Google. I'll talk about some of those risks later on in the video. Next, let's look at Digital Turbine and their business and go deep dive and just figure out what this company is all about. Okay, deep dive, Digital Turbine, ticker apps. If you have not subscribed yet, please click subscribe, click the little bell to get notifications. So Digital Turbine is a leading end-to-end solution for mobile technology companies to enable advertising and monetization solutions. Its digital media platform powers frictionless end-to-end application for brand discovery and advertising, user acquisition and engagement, operational efficiency, and monetization opportunities. We'll talk about more of this here in a minute. The company provides on-device solutions. That's their core business. They've made some acquisitions to change that, to all participants in the mobile application ecosystem that want to connect with end users and customers who hold the device, including mobile carriers and device original equipment manufacturers, or OEMs, that participate in the app economy, app publishers and developers, and brands and advertising agencies. So that's a mouthful. It'll make more sense as we go through it. Let's look at the next slide. So their core business, Digital Turbine, what they historically have always done is they essentially have pre-installs and primarily on Android devices. So this is really an Android partner, and that's important to note because we talked about iOS earlier. So that's their core business, pre-installs on Android devices. They call it on-device media, okay? On-device media, this segment is and this is from a 10Q report, this segment is the legacy single operating and reporting segment, media distribution of the company prior to the Ad Colony and Fiber acquisitions, and I will explain what those portions or the segments of the business do here in a minute. Businesses pay apps to be pre-installed on devices like a phone, right? Why? The likelihood of usage greatly increases. Example, I'll give you a quick example. If Lyft pays to have their application on the phone, when you buy it, you're more likely to use Lyft. Now, I will tell you too that they try to customize the applications on the phone based on the person, but they have very limited information about you, so that's hard to do. But one example of why this would work is, say you've never used Lyft or Uber, you get a phone and it already has Lyft on it and not Uber, you might just try it out. And humans are, creatures of habit. So you might try Lyft, you might like it, why change it, right? That's kind of the idea behind having these applications pre-installed. It brings awareness and it creates habits if people start using those applications. Now, it's important to know with this business that gross margins are lower. They're around 30%. The reason for this is that the revenue is split with these different companies like the telecom companies. So it might be Samsung who creates the phone. It might also be Verizon. Everybody gets a piece of the pie and it makes the margins lower for Digital Turbine. So you say, well, with the iOS changes with Apple, won't that impact their growth? Great question. Remember, their core is really around Android. So if anything, it actually could help their business, because if you look at this, mobile ad spend has shifted more towards Android and away from Apple. And you might see that even accelerate more because of these changes. So if you look at this year-over-year growth in Facebook US mobile ad spend by operating system. Now the blue is Apple iOS, and the green is Android. And you can see one is going up and one is going down. This is a huge divergence right here, guys. This is very, very powerful. And this really only goes back to September of 2021. I would imagine that this is actually even more accelerated. And it's part of the reason why Meta Platforms or Facebook stock is down as well. I mean, they're spending tons of money on the metaverse, but they also have a deceleration, especially with the Apple devices. And certain companies are hit worse than others with iOS. I would be in the camp to argue that Digital Turbine could actually benefit from the Apple changes. So there's more ad shift to Android, and this actually helps apps and increases their TAM, or their total addressable market. Additionally, apps has expanded outside of just pre-installed applications. They've made some really key acquisitions that makes them a much more complete company, and it increases their total addressable market by a lot. So first I want to talk about single tap. So ad banners on phones allows users to bypass the App Store. This is powerful, and they do actually have a patent on this. I would think it wouldn't be that hard for another company to disrupt this, but right now it seems like they have a nice little niche with this. Allows users to bypass the App Store and download a new app while continuing what they're doing. So let's say you're playing a game and you get a pop-up, hey, try this game that's similar to the game you're playing now. You click that, it seamlessly downloads that application, that game in the background while you continue doing what you're doing. You might be browsing on the web, you might be playing a game. That makes it really simple, really seamless, and it makes it more likely that people will try more applications. This segment of the business grew 600% year over year last quarter, and it's now 6% of apps revenues. I think that they could even accelerate that even more. So let's first talk about Digital Turbine Exchange. Now, that used to be called Fiber Marketplace. This is one of their key acquisitions. Okay, Ad Exchange is a digital marketplace that facilitates buyers and sellers of ad inventories between advertisers and publishers. Remember what we talked about at the beginning of the video? This is starting to get really interesting. We're starting to tie it together. Fiber's principal operations consists of supplying mobile advertising platform that includes a direct supply of in-app advertising inventory to its customers. Fiber specializes in software-based automation, there's that word again, programmatic trading of advertisements, and aims to enable mobile app publishers to monetize their digital content through the placement of targeted, high-quality ads with their apps. Fiber connects app developers and their users with advertisers worldwide who bid on the ad space with the app predefined spaces. Fiber's customers provide insertion orders or equivalent contracts for advertising during campaign windows, and there's different ways that they can get paid. So if you look at this, I do want to cover this last part. Customers will contract for these services, which are monetized through a measurement of user impressions, clicks, installs. There's lots of ways that Digital Turbine can get paid here, guys. Specifically, so when a user installs a game, when a mobile ad is delivered to a user based on CPM, that's cost per 1,000 impressions. When a user plays a mobile video ad all the way to completion, they get paid even more. That's called CPCV, or cost per completed view. And then they also have when a user clicks a mobile ad based on CPC, similar to YouTube advertising, cost per click. They can get paid a lot of different ways, and this is a new segment of their business, and I'll show you what that means later on a couple slides. So next is Ad Colony. Ad Colony is an ad network that aggregates ad inventories from publishers and sells them to brand advertisers. It works with over 300,000 publishers, allows advertisers to reach over 1.5 billion monthly active users. You hear the term MAU. So in-app media, or Ad Colony. Principal operations consist of supplying a mobile advertising platform that includes a direct supply of in-app advertising inventory to its customers. Ad Colony customers provide insertion orders for advertising during campaign windows, where Ad Colony provides inserts, tracks performance. Customers will contract for this service, which is monetized through a measurement of user views, again, clicks, installs, etc. So when a user installs a game, again, when a mobile ad is delivered to a user, CPM, when a user plays a mobile game. So now Digital Turbine, with these acquisitions, it's much more than just those pre-installed payments. That's used to just be a pre-installed app. That's how they got paid. Boom, they're done. Now they've created this entire ecosystem. You can see they get paid in lots of different ways. When people install a game, when an ad is delivered, when they watch a video ad all the way to completion, when they, CPC click arrangements. There's lots of different ways that they can monetize their platform now. Also, Appreciate, which is a demand-side platform or DSP that we mentioned earlier, provides user interface for advertisers to purchase ad inventories from publishers. And then the Fiber supply-side platform, SSP, we talked about both of these earlier, allows publishers to manage ad inventories. Publishers can monetize their ad inventories to advertisers. So lots going on there. I hope you caught it all. So over 10,000 apps, all genres, not just games, but also work-related applications, and then 1.2 billion MAU or monthly active users. So this slide really paints a good picture of what's going on. So you got Appreciate, you got the programmatic UA, you got the publisher monetization with Fiber, and then you got the ad colony. And those are kind of the three pieces. I'll show you a couple other slides that helps kind of put that together as well. One thing before I forget, Digital Turbine and TikTok announced comprehensive expansion of its app distribution partnership for North America. So that is a big partnership. I made my camera as small as I could so you can see the whole screen. These synergies create an economic flywheel, okay? So back then, on the top, advertiser, they pay to get X. They put an app, they pre-install it. Digital Turbine pays DSP, the third-party DSP, you can see the flow. Now look at the bottom. By owning the DSP and the exchange, we keep more. So they can make more money. Publishers can also make more, while advertisers could actually pay less. So now you've got Digital Turbine keeping all of that in the middle. And so they've created an entire ecosystem. They've really built out the business. So Digital Turbine has created a one-stop mobile growth and monetization platform for consumers, advertisers, operators, and OEMs. Company operating at a global scale, 1 billion in revenue. There's an asterisk on that, but they've got 40 different OEM partnerships. I'll show you some of those later, some big names. 45,000 publisher partnerships, 500 plus advertiser relationships, and 1.5 billion monthly reach in 4 continents and 23 countries currently. This is hyper growth right here, guys, and you can see some of these numbers. And this is a little bit older deck. I'm gonna go to another deck here in a minute, but this is a powerful one. You can see revenue, EBITDA, you got the non-GAAP EPS, earnings per share, all that is just ramping up. I mean, that's almost a parabolic looking chart. That's what you want to see as an investor. Obviously, you want to see that continue. You want to see that growth continue to keep going, because once it slows down, the stock's going to get hit. But right now, they are firing on all cylinders. So we have only just begun to tap a large growing market. And this is kind of tying back the beginning again. So right now, 2020, this is showing $190 billion, okay, for the mobile ad revenue market share. That $190 billion is Google and Facebook, and the rest is $50 billion. Now, if you look to the right, mobile ad spending, and this is in billions worldwide from 2021 to 2025, you're going to see that that's going to grow to $540 billion. That's the total addressable market for mobile ad spending. So I think there's going to be room for a lot of different players to make a lot of money, especially if they can continue to take market share from these mega cap tech stocks. Of course, there are risks to that, and we'll talk about those later. On-device tech creates exclusive marketplace capabilities. You look at this 340 billion mobile ad spend, you've got big companies on the left there. You can see all the logos from Verizon, Ford, et cetera. So you got the programmatic demand DSP, that's Appreciate. You got the marketplace, you got the publisher monetization, you got the publisher app content discovery, and then you got the operator OEM partners. So that's the Ignite on device, they're calling that on the bottom. Kind of reiterate this again. So their mission is to become the largest independent growth and monetization platform, leveraging our unique on-device technology and long-term relationships. Not the best mission statement in the world. I mean, I like the message there, but it could be written a little bit better. So they got Appreciate. We talked about this, right? They completed this March of 2021. These are all acquisitions really in the last year or so. Programmatic app install demand side technology platform with proven single tap scalability that we talked about, existing integrations and key advertising sources, including Ad Colony and Fiber. So Ad Colony, they got that acquisition April 2021, top tier mobile advertising demand side platform. That's a DSP that services leading global brands and agencies with award-winning creative studio and mobile video advertising technology. And then Fiber, this one's also completed. This is a little bit older deck. Leading independent mobile mediation and in-app media exchange platform with advanced analytics tools and expertise in video advertising and real-time bidding. Lots going on there, completing an entire ecosystem. So 3 key drivers accelerate growth in the platform. More devices, and if you look at the statistics for devices, mobile devices, that is not slowing down whatsoever when you think of the global population. So more devices, more new products, more advertiser demand, platform network effects. You know, the idea behind it is that it's very scalable and that these guys could be, could be a 10x stock. They've already been a 10x stock from when they first, came available to the public market, and they probably have another 10x to go, but there are some risks to it, and we'll talk about the risks as well. So this is what I wanted to really show you. So validated by market-leading global operators and OEMs. This is key because they have these partnerships, and it does create arguably somewhat of a moat because they do have decent market share when you think of Android, and they're working with Verizon, AT&T, Samsung, Singtel, all these different companies on your screen, Lenovo, Motorola. This is big time stuff here, and they've got these partnerships, which obviously is important for their business to continue to grow. Okay, I'm gonna get rid of my camera because this is a really important slide here. This is the money maker right here. This is the home run ball. Diverse products drive revenue at activation point and beyond. So look on the very far left over here. You got first day revenues, app discoveries. You got App Wizard, dynamic installs, and games folder. So this is their legacy part of their business, and they've added all this other stuff, okay? Then you've got recurring lifetime revenues. So they're gonna constantly have revenue coming in all the time. Every single day, every single hour, every single minute, people are using and consuming this stuff. They've got home screen, they've got discovery bar, web portal. You've got the brand advertising demand. This is Ad Colony. So agency relationships, high def video, interactive video, the programmatic ad demand. So you got single tap, you've got the retargeting. This is the appreciate. And then you got the publisher monetization, the exchange, the mediation, and the offer wall. So they're doing both sides of the fence here, guys. They're one complete ecosystem when you think of specifically for mobile advertising, and more specifically really for Android devices. I do want to cover this real quick because it is important. The single tap install. So it's patented, I mentioned, on-device technology, creates significant improvements in programmatic UA. So it improves app install conversions, right? Reduced cold start. It plugs natively into call to action. And then you got better user experience. So it provides uninterrupted user experience. So basically they can click this and they could be doing what they're doing, like I mentioned earlier, playing a game, whatever, and it just seamlessly downloads this in the background. Single tap installs. Another quick slide here just to show you just their reach, different brands that they're working with. So currently working with top brand and performance advertisers. You got YouTube on there, all these different news media outlets. You got Twitter, you've got Hulu, you've got Pandora, Walgreens. I mean, they're very diverse. These guys are working with a lot of companies. You got Amazon, eBay, Walmart, Visa, American Express, Bank of America. There's a lot of great logos on this slide deck. Acquisitions create significantly larger opportunity, and it's even bigger since this slide deck was created. And you can see everything's focused really on these Android devices. Top publishers, you've got TikTok I mentioned earlier, you got ESPN in there, Candy Crush. This is big time stuff. And with this fiber and Ad Colony combined in here, top publishers make $2 to $4 billion from in-app advertising alone. So for every $1 billion spent on advertising, top publishers make $2 to $4 billion. So that's a great return. They're going to double to quadruple their return from in-app advertising. So this deck, guys, is from their Investor Day, November 11, 2021. So it's pretty recent. So I want to go through some of this. It has some really good information and updated from that last slide deck we looked at. A lot has changed since the last time we met. Longer term growth rates, great information in here. I don't want to spend a lot of time on it. I did talk about this briefly on the last slide deck, operating at global scale. So they still have that $1 billion key stat for revenue, monthly reach, 1.5 million users, 1.5 billion users. I'm going to make my camera a little smaller so you can see. But you can look at this growth, revenue. So this is updated now, guys. We saw in that last slide deck how they were kind of ramping up. This thing keeps going up. It looks like a parabolic chart. If I were a trader and I was trading this stock, I'd probably be thinking about taking some profits on it. So you have to remember this company does have risks though, especially, and we'll talk about more of those risks later. And there is plenty of competition. I'll also talk about some competition and I'll break down this space a little better. So definitely stay tuned. If you have not subscribed, subscribe to the channel. I do a mixture on the channel from deep dives like this to stock pick ideas, early retirement. We try to cover everything A to Z, from personal finance all the way to retiring early with dividends. So deep dive today here. Definitely subscribe, guys. Like and comment if this is helpful. But check out the revenue, the EBITDA, the non-GAAP earnings per share. All that's ramping up, and you want to see that. So this is a profitable company. It's expensive. It's trading at a high PE ratio, but these guys are growing. The earnings is tomorrow night after closing bell. So we'll see what happens. It's one of those where they could have a great earnings, they could pop, but of course, if they have a miss, it could get hit significantly. This stock has come off the lows pretty nicely. So we'll look at a chart later and kind of take a look at that where we might want to buy the stock. I do own some shares of this. I have a starter position. The largest independent mobile growth platform, and they call this Ignite. And you can see, so you got the app and you got brand advertisers. They're really completing that whole puzzle when you think of the AdTech space. Consumers are spending more time on mobile. This is important. So look at this. In 2019, this is share of all media time spent in mobile in US. So 2019, you have 30.4% ramped up to 35%. So slowly growing the number of devices that are in the world and slowly growing the usage per day as well. More time in mobile has led to more installs and more ad spend. You can see it's growing. There's money to be made in this space, guys. I think this one is well positioned, especially when you think of Android devices. Let's keep going here and keep looking. There's lots of great information. We already looked at this slide showing you how Android is ramping up, iOS is ramping down. This is actually a positive thing for a company like Digital Turbine that's focused on Android. We've only just begun to tap these growing markets. We've kind of covered this as well. You can see smartphone in-app purchasing spending, $38.44 billion. It's going to basically double over the next 4 years. Not quite double, but go to $67.58 billion by 2025. And those are big numbers, guys. Big numbers. Lots of money to be made in the AdTech space. So this is absolutely huge because we've been talking about how they've completed this ecosystem and increased their TAM, but you're wondering, what does that look like? Digital Turbine now has significantly larger TAM. Acquisitions have increased our 2021 TAM from a share of 96 billion. Listen to this. 96 billion to $369 billion. That's not a small jump. That is a very large jump. I mean, almost 4x from 96 almost to $400 billion. Before acquisitions, $96 billion market cap, 5 billion on-device app installs. Now look at this. You got 96 billion plus app install market, and then the total mobile advertising market, 369 billion. So I want to stress, this is total addressable market. This is not going to be their revenue necessarily, but the pie is even larger that they can go after, and therefore they can create more revenue, more profits, and so on. So they should be able to continue to grow. It'll be interesting to see how these acquisitions come together. It's also going to be interesting to see how competition reacts to this. You saw earlier, there's been a lot of mergers and acquisitions in this space. Well, I think it'll continue to happen. I think you'll see more M&A. And I can even see a company like Digital Turbine being bought by somebody like Google. Now, the problem with that is if Google buys them, there's probably antitrust issue because now they own the entire thing. So when you think of it from an investor standpoint, the biggest risk is going to be Google actually not buying them, because buying them would be a good thing. We'll probably get a premium as a shareholder. Where the risk would be is if Google said, I'm just going to cut this off and do it myself. Now, the problem with that is that's where you get into antitrust. That's kind of the issue, some of the issues that Apple's dealing with. And so there's a good chance they don't do that. But literally, Google could destroy this business overnight if they decide to do something radical. And that is the biggest risk for the stock when you really break it down. So we service this TAM with much more supply and product. Before acquisition, 750 million devices. And now they're talking about 750 million plus 1.5 billion or 1.5 billion after. So doubling the number of devices. So you've got, you're adding the in-app monetization, the brand video, and the multiple apps and devices. Before they just had those dynamic installs, the single tap. And now they've really kind of put that whole thing together by including the monetization parts on the other side. Significant tailwinds throughout the news cycle. We've seen a lot of drama. Facebook ad revenue feeling brunt of Apple privacy changes. We saw Snap, Facebook, Twitter, and YouTube lose $10 billion after iPhone privacy changes. This is big time stuff. A new Senate bill would totally upend Apple and Google's App Store dominance. So all these risks, they're trying to say, hey, invest in us because we're a little bit safer than these big guys and we can take some of this market share as more pressure comes on these big guys. Google is slashing the amount it keeps from sales on its cloud marketplace as pressure mounts on app stores. Across 4 continents, Apple's control of payments is under attack. Google Play to support alternative billing systems in South Korea following new law. So this is in the headlines all the time, and they're trying to stress that for us. Tailwinds support significant future opportunities. Our platform is well situated to expand, take advantage of market tailwinds. So carrier OEM, app stores, in-app payments, iOS, connected devices, cross-device advertising, connected television. They're saying they can expand in other areas as well. Right now, they're very focused on mobile, but here they're talking about connected TV. So you think of connected TV, start thinking about the ROKUs and the Trade Desk and things like that. Extending opportunity with our telcos. So you can see they've got some great partnerships, and they're increasing their partner investment to really expand those opportunities to other areas. The same drivers support new and current business. There's so much good stuff on this deck, guys. You could spend hours just going through this deck if you wanted to. So quick overview of mobile ecosystem. Okay, performance advertising. I think this is all important because if you're really paying attention to this, it helps you understand this whole ad tech space. It's a pretty complicated space. There's a lot of moving parts to it. So you've got performance advertiser and brand advertiser on the left. You've got Ignite on-device media. That's going to be your digital turbine in the middle. And then you've got your on-device inventory. So your Verizon, Samsung, AT&T, they're partnering with. They've got the demand platform, the brand ad network and creative, and then digital turbine exchange, and ad exchange goes back to the app publishers. So that kind of siphons in. So they're really completing that ecosystem for the OEMs as well as those publishers. You know, they're really driving the TAM home. Digital Turbine has significant larger TAM. Acquisitions increase our TAM to over $500 billion by 2023. Talking about all the different synergies here. The publisher, the carrier, OEM. Really good slides. Really helps you understand how large the opportunity is for a company like Digital Turbine. Cross-selling's already boosted revenues. McDonald's. And the McDonald's app's been doing really well. If you look at some of the usage statistics on McDonald's app, they don't really have specials anymore. They make you download the app, and they have apps like, or they have deals like buy one Happy Meal, get one free, yada, yada, yada. But, you know, they're doing some stuff with Pandora, pre-install, Farmville, a lot of really good stuff that they're working on here. These synergies can create an economic flywheel. We already looked at this, but just to look at it again, just look at it. It went from then to now, and they're really completing that ecosystem so that they can keep more of the pie and they can monetize more and create more revenue. Single Tap's path to 1 billion plus in revenue. So in the future, it says today, they've got Twitter and Pandora. They want to, in the future, advertisers live 150. They want to add, you know, looks like Walmart, McDonald's, average monthly spend per advertiser. They want to increase that. Publishers live. They want to increase top mobile install drivers. They want to do Facebook, Snap, Instagram. Monthly revenue per publisher, 1.5 million. So they're really trying to grow that part of their business. Significant scale and expanding operating leverage. All these numbers just keep getting better and better. Of course, a big part of it's from acquisition. So once this all kind of settles in, they have to continue to accelerate that growth or the stock will get hit. Operating leverage drives growth in earnings. You can see the change year over year, massive 184%, 176%. I mean, not only do they have growth in earnings and EBITDA. I mean, these guys are set up pretty well. I'm surprised the stock doesn't do better. I think there's just a lot of uncertainty in the ad tech space. I think the risk, that the elephant in the room or the 1,000-pound gorilla in the room is really Google and what happens next. Like, do they continue to allow Digital Turbine to grow market share, or do they, you know, try to buy them or just kind of shut it off altogether? I think there's a lot of risk there, and that's probably why people are hesitant. Plus, the overall market's been selling off growth stocks as well. This stock, though, the more I research it, the more I think, wow, this is a really great opportunity. You might consider it somewhat speculative because of the risks, but I'm telling you, this easily could be a 10x stock if you hold it for 5 or 10 years. So why we believe in $4 billion. TAM is enormous with secular tailwinds, making it grow even faster. Differentiated strategy with on-device and independence. They do have some direct competitors. I'll talk about that in a minute. End-to-end products and global partners to make it happen. Operating leverage or flywheel, business model, track record of execution, and so on. So I know that was a lot. Let me talk about what these guys do, some of the competition. I'll talk a little bit more about the valuation. Then we'll look at a quick stock chart and we'll wrap it up. I hope this is helpful, guys. It's a deep dive. Stay with me. Stay tuned. Okay, so some quick notes here. I'm kind of losing my voice, but I'm going to do my best. So Trade Desk is more so on the demand side, and Apps was primarily on the supply side, but it's kind of both now. We'll get to that in a second. So Trade Desk is going to be buy side. Okay, so Trade Desk buy side. Magnite is really going to be on the sell side. And Apps, if you think about it, one way to look at it is Digital Turbine is really both. They're kind of like Magnite and Trade Desk together, plus an ad agency combined. When you add all the different components that they've acquired, they've made themselves kind of a powerhouse within a specific niche, that being mobile advertising and that being specifically Android devices. So it's really interesting when you look at that. There's a couple of direct competitors. So you've got ironSource, the ticker is IS. It's really a direct competitor of apps. You also have stocks like AppLovin, and there's plenty of others. I considered even doing a series because there's so much information in the AdTech space. You could talk about 5 other stocks that are in this list that I really like. There's a bunch of them. Every time I name one, though, I've got to tag it when I'm doing Motley Fool stuff. So I'm going to try to keep the tickers to a minimum. But all the different ones in the AdTech space. There's a lot. And there's even gaming companies that are kind of crossing more over into the AdTech space. So that kind of paints the picture a little bit better, hopefully. So a lot of people might own Trade Desk and they might own Digital Turbine and not really understand the difference between the two. That's really kind of the difference between the two. And you think of the Trade Desk too, it's much more on the connected TV side, although they have expanded much more as well. So to me, having both those stocks in a portfolio does make a lot of sense. You see arguments sometimes like, oh, I'm just going to buy Trade Desk, forget about those other ones. I think that's short-sighted because Trade Desk is pretty expensive. I have owned that one since 2019. I think I'm up 300%. Trade Desk is a great stock. I really like Green, the CEO. But I do like some of these other companies. They're a little bit maybe more speculative, a little risky. If you're going to pick one out of the category, that's kind of the one that sticks out as high quality. I think Trade Desk is probably that stock, and I do own that company. But I do own some of this Digital Turbine. I have a starter position. It's kind of speculative, and I did some homework before I bought it, but I've done a lot more due diligence since then with this video, and I feel more comfortable because I do understand the risk, and I think it's a calculated risk reward. And we'll talk more about the valuation here, and we'll talk a little bit more about the stock price as well. But the biggest risk I mentioned is really going to be Google, and kind of if they decide just to shut them off. So there's really not a ton of competition when you think of it. They have some direct competition, but when you think specifically for Android and what they're doing, they really have a niche, and you can even call it maybe a moat. Maybe not the most solid moat in the world. It's not Disney or anything, but they don't really have competitors. They've got a decent moat, but Google can really smash them by blocking third-party applications or third parties in general on Android. If Google blocks third parties, these guys would be in a lot of trouble. I don't think Google will do that, but it's a risk to be aware of as an investor. They don't work really with Apple at all. So that's something to note too. So Digital Turbine does not work with Apple really at all. There is some concentration risk because they rely so much on Android, and you can look at that as a pro or a con. And we talked earlier about how Android's kind of ramping up and iOS is starting to ramp down in areas. So it could actually play out to be a benefit for Digital Turbine. All right, guys, Digital Turbine Inc. Ticker is APPS on the NASDAQ. It's trading at about $44.50 today. This is headquartered in Austin, Texas, founded in 1998. I mentioned earlier they've changed their name a bunch of times. Number of employees, 280. I think they make over $1 million per employee, which is a good number. Of course, his acquisitions make it difficult, but if you look at the market cap, it is about a $4.3 billion market cap. The PE ratio right now is at 82.6. The 52-week high was $102, so it's beat down pretty bad. The low is 35, so you're still at a decent area. Again, it reports earnings tomorrow. This thing could have good earnings and rip, or it could come back to, it probably would retest $35 if it had a bad earnings report. Maybe it goes lower. But I do think this range is still attractive for the stock. Let me look at some of these numbers here. And I've got some notes here and I want to read to you. This is important for the valuation. I think this is a better way to look at it. The 82 P ratio is not terrible for the growth. You saw some of the growth numbers. They're extreme. Of course, those acquisitions make it hard. Like I said, this is expected to have about a 30% compound annual growth rate the next 3 years. Okay, so this is a free cash flow story. Nearly double the free cash flow from 2020 to 2021. It trades under a 30x free cash flow, which really isn't that bad if you consider the growth in that free cash flow. The EBITDA is accelerating. It trades at less than 4 times this year's revenues, which you could argue is inexpensive for this type of a hyper growth stock. Okay, so that's the valuation. Those are some of the metrics to look at. This earnings is going to be critical because we're going to see how some of these acquisitions are really coming together for them. And so, like I said, the stock could rip or it could dip. I have a little bit as a starter position around these levels. And if it goes lower, I'll probably be adding more shares. So here is a chart of Digital Turbine. You can see this thing ripped up and it's come down really hard. This level here is where I said it was a buy. It did dip below that. This is where I bought, where this yellow circle is. It dipped below it to 35 and it's come back in that yellow circle. And you can see this thing, you know, it's been all over the place. The high on this was close to $105. So you can see it basically ripped, you know, back here, June of 2020, this was a $6 stock. If you would have bought this thing at $6 and it would have ripped to $102, you made a lot of money and you were very happy. So it's one of those names where, you know, it ripped up hard and it's made a nice pullback with this whole sell-off and this correction, which makes a lot of sense. But it's another stock where because it was so low not that long ago, and trust me, there's reasons why the stock is higher. I get it. But you have to understand a lot of people own the stock for a lot less. So could this thing go to $20 at some point? That could happen. If the earnings are bad enough, if something crazy happens, if the market just completely tanks, this thing certainly could come lower, especially when you look where it came from. It came from, you know, $6, $7 back here, pandemic levels. In fact, if you look at the pandemic, if you look at March, it got down to $3.44. So if somebody bought this at $3.44 in March 2020, they're still up a lot at $40, and they could bail out the stock, you know, anytime lower than that. I don't think it gets that low, but there's been crazier things that have happened. So this seems like a pretty attractive price. The previous low around 35. I still like it, 45 and under, but I can't promise you the bottom. Earnings are going to be critical tomorrow, guys. So definitely stay tuned for the earnings. I might even do a quick video update after the earnings report just to give you an idea of how the earnings went and what my thoughts are. So definitely stay tuned to Digital Turbine earnings tomorrow night. I hope this video was helpful, guys. If it was, make sure you drop a comment, drop a like. If you haven't subscribed, please subscribe to the channel now and click that bell to get notifications. I appreciate your time and attention. Hope you have a great rest of your day. Take care.